CRML has caught fire again, ending last week at nearly $15, a staggering 100% gain in just 5 trading days. Is CRML refueling for a 10x move in 2026, or is this just a dead cat bounce?
Hi everyone, welcome to our channel TinyToTitan. We focus on explosive, niche stock opportunities before the crowd. I'm Bobo, an ex-investment banker who has worked in the US and Asia and has covered various different sectors. Today, I'm bringing you an in-depth analysis of CRML, a unique rare earth play that has become the centerpiece of the US dream for resource independence. Before we dive into the analysis, please like the video and subscribe to our channel so that you don't miss any update on high-growth sectors or stocks we cover.
Just a reminder, this video is for informational purposes only and is not financial advice. Let's do a quick recap. CRML owns Tambridge, a massive 4.7 billion ton ore body in southern Greenland. It's positioned as one of the world's largest rare earth reserves, boasting a total rare earth oxides of 0.38% with a remarkably high content of 27% heavy rare earths. Driver number 1, sovereign urgency. CRML shares ignited last week on intense speculation regarding direct US government participation. With President Trump's renewed remarks about a Greenland takeover, the island has shifted from a neighboring territory to a national security treasury. While a direct equity stake was previously denied by both the White House and the company's CEO, the 2026 political landscape has changed the game. If the US takeover materializes, CRML will trigger a massive sovereign premium on speculation that the government could take a direct equity stake. Even with the recent trade truce, China's weaponization of rare earths persists. Just look at the recent export ban on Japan. For the US, securing Tambridge, the largest heavy rare earth reserve in the West, is no longer a choice. It's a strategic imperative to achieve its rare earth independence. This sovereign premium also includes a scarcity premium. Why? Because CRML is effectively the only US-listed target giving investors direct exposure to Greenland. When institutional or retail investors look for a US-listed Greenland play, they have exactly one place to go. Driver number 2, execution certainty. Last Wednesday, January 7th, CRML officially approved the commencement of construction for its pilot plant facility in Greenland. This is the proof of concept the market has been waiting for. We are tracking critical 2026 milestones. In the first quarter of 2026, release of the bankable feasibility study and finalization of the remaining 25% offtake agreements. This milestone will establish a fundamental valuation floor for the company. In May 2026, completion of the Greenland beneficiation pilot plan. This will prove industrial-scale physical separation of high-grade eudylite from the ore. In the second half of 2026, validation of eudylite hydrometallurgy via the company's Romanian JV refinery or its other offtake partners. This will demonstrate that solvent extraction to generate high-purity oxides works at commercial scale. Any faster than expected execution here removes a layer of risk and justifies a higher valuation multiple. Lastly, the underlying value of Tambridge matters. The market is currently anchored to a $3 billion NPV from the OPEA, but as the BFS nears completion this quarter, we are expecting a major upward revision. Why? Drilling results from late 2025 show high grades, and the Romanian JV refinery is demanding higher grade concentrates, which boosts project margins. If the updated NPV surprises the market, say hits $12 billion, CRML could be drastically repriced. Now let's break down the math. Since CRML is not expected to generate significant revenue before 2028, we'll look at valuation through a price to NPV lens. Here's my hypothetical framework for how the stock could re-rate in 2026. In our bull case, we assume the US takes a direct equity stake and China's rare earth export ban respikes. This justifies a 0.5x sovereign urgency multiplier. Simultaneously, execution milestones stay perfectly on track, and the BFS delivers an NPV surprise of $10 billion. Combined with a 0.4x execution multiplier, we're looking at a total 0.9x P to NPV, yielding a target price of approximately $75 per share. For our base case, we assume moderate sovereign urgency. Negotiations on the Greenland takeover stall, but trade tensions remain high. While the BFS is released on schedule, we factor in slight delays in pilot plant production. With the revised NPV of $5 billion and a combined 0.6x multiplier, the implied price settles around $25 per share. Finally, the bear case. We assume the US-Greenland deal fails entirely and China prolongs the trade truce, cooling the sovereign premium. combined with delays in both the BFS and the pilot plan, the NPV stays anchored to the original $3 billion PA figure, and the 0.3x total multiplier, the stock likely retraces to the $7 support level. As we saw in 2025, the volatility is extreme, but the asymmetric upside for CRML is unparalleled in 2026. Are you betting on the Greenland premium, or is the Arctic challenge too high? Let me know in the comments. I'm Bobo with TinyToTitan. Don't miss the next Titan opportunity. Like, subscribe, and I will see you in the next one.